Sorry about this, guys. Sorry, recently I'm having trouble recording these sessions for everyone, so I want to make sure it's all good. Okay, so let's go ahead and get started. So let me share my screen for you all. Screen. All right, how we go now? Before we get started, who already knows what ICT PO3 and OHLC is? So open, high, low, close. When we say that, we're talking about candle closures, essentially. Anyone know? Seems like a few do, yeah. All right, cool. So in today's session, we're essentially going to go over what exactly is. Yes, I'm recording it, but I cannot guarantee it will be perfect because every time I've recorded the last few Discord sessions, they've gone horribly wrong. But yes, I am recording it and hopefully it will all be good. Anyways, so what we're going to cover today is what is obviously ICT's PO3, understanding OHLC, so open, high, low, close of candles, and its significance, and how these concepts can work together to basically help you trade and get better executions in your trading. Now, what I'm going to do today is basically go over first open, high, lows of candles. So the open, right? OHLC stands for open, high, low, close. Now, the open is the first traded price in that time period. So if we were looking at the daily candle, that would be the daily open of that candle. The high is the highest point in that price period. So if we're looking at a daily candle, that would be the high of that candle. The low is the lowest price in that period. So again, the low of that candle. And the close would be the closing price as that candle closes. So this works on every single candle. It's just how every single candle is formed. There's always an open, there's always a close, and there's always a high and a low of every single candle. Now, just to show you a quick sort of image representation of that, as you can see here, the bottom of this candle would be the open, right? The top is the close, the high is the wick at the very top, and the low is the wick at the very bottom. That would be for a bullish candle, and the same for a bearish candle. So you've got the open here at the body, the close at the bottom of the body, because this is where the candle closed. You've got the low, which is the very, the most extreme point in the candle, so the wick low, and then you've got the high of the candle, which is the high of the wick on that candle, okay? So does everyone understand that? It's a pretty basic concept. That's just how candles work in general in trading. Everyone good with that? Open, yes. Okay, cool. Perfect. So now I'm going to move on to what exactly is the PO3 and how you can use that with the power, with that sort of concept. So the PO3 it's what's known as AMD, right? Accumulation, manipulation, and distribution. Now, what this means is what you'll see is price accumulate, right? Like this. So if I just go onto trading view here and I draw this out for you guys, right? We see price accumulate like this. So price chops down. It's really annoying. And then all of a sudden, it will make an explosive move to the downside. It will take all that out and then it will distribute to the upside, right? So this is accumulation here, manipulation, and then distribution, okay? Still, right? Everyone following with that, okay? Now, accumulation is essentially the stage where essentially orders are generated, right? Whilst we're chopping up and down, that's orders and liquidity being generated. Manipulation stage is when all of those orders get taken out. And then because of all those orders and that sort of sheer size of those orders getting taken out, that then causes us to distribute in the other direction, okay? So how can we use open, high, low, close with the PO3? Now, as you can see from this diagram, right, so say, for example, this was the daily candle, okay? The daily candle, we would look at the open, and if we were bearish on the higher time frame, right, so it's important to find your daily bias, which we'll cover as well in today's session. It's important to find the open of the daily candle, mark that out on your chart, and then when price accumulates and then manipulates above the open price of the daily candle, we can then look to sell, right? Because that's creating that wick at the top. And then we want to target, obviously, the low and the close down here. Same vice versa. If you were buying, you would buy below the market, buy below the open in a bearish market, okay? So here is an example of them kind of working together. Okay, so here you can see the accumulation, then you can see the manipulation, and then the distribution. Now, one of the most common sort of practices that people use in this quite a lot is Asia, London, and New York, and they treat it as accumulation is Asia, manipulation is London, and distribution is the New York session. So as you can see here, right, this accumulation here would be the open of the candle. This manipulation here would be the very bottom wick, so the low of the candle over here, okay? So this manipulation would be at the low. The distribution is then what happens after, and that's the high of the candle. And then just to show you that even further, as you can see here, accumulation here, right? This is where the candle opens. You get this accumulation normally during Asia session at the opening price of the candle. Then you would get a manipulation, which creates this high here of the day. And then price would continue to sink down, and that will give you the low of the day. Vice versa, if you were bullish, you would get the accumulation at the open of the candle, then the manipulation to put in the low of the candle, and then the distribution after all this accumulation, these orders are taken out, to then go to the high of the candle. Okay? Would you please repeat which markers are associated with AMD? So accumulation, manipulation, distribution. Is everyone following? Does that make sense to you all so far? So AMD, power of three, is accumulation, manipulation, distribution. It's built up of those three things: accumulation, manipulation, distribution, right? Accumulation is a buildup of orders or liquidity. Manipulation is taking out all of those orders and creating a fake move. And then distribution is what happens after all that order and the liquidity is taken out. And then we distribute to the opposite direction. Okay. Oh, okay. So the most common example I said was Asia, London, and New York session. Asia can be treated as the accumulation, London treated as the manipulation, and sorry, I'm getting slightly ill, guys. So you might notice my throat. New York would be the distribution. Okay. And here's sort of an example. You can see that live on this chart here. Sorry. So you can see the accumulation here, right? This is Asia session. Then you can see the manipulation here. This would be London session. And then you can see the distribution that happens here, which is New York session. Okay. And then here is that labeled out for you as well. So as you can see here, right, you've got the consolidation here, which is the Tokyo Asia session. Then you've got the manipulation here in the London session. And then after we take out this accumulation, we distribute lower. Okay. As I said, this is just one of the most common sort of ways that the power of three is known, but there's a lot of ways that you can do it, and you don't have to do it just on the daily candle. Price in ICT terms is fractal. So this works on every single time frame, including the 15-second time frame, 30-second time frame, 1 minute time frame, and so on. Okay. So moving on. Now, you don't just want to look for, and what I am going to do is I'm going to backtest this with you guys today. I'm going to show you a few live examples just so you know it's a bit more solidified. I'm not just going to show you screenshots and case studies. We'll go through it together. Okay. But what you want to do is essentially, you don't just want to have that as well. To make that trade a higher confluence, you want to use fair value gaps and order blocks, right? To sort of up the percentage chance that this will work for you. Okay. So this is the same thing, but you can see this accumulation here, and then you can see your manipulation here. But we manipulate into an order block or a fair value gap, and then we distribute from there. Now, as well as that, you also want to use all your basic ICT entry models to give you extra confluences. So they're all in the Discord already, but I'll show you them here. So as you can see, this is just a summary. So you've got the market structure shift fair value gap model. You've got the, the model 2, model 3. You've got the box set up. You've also got the inverse fair value gap set up, which is becoming a lot more popular here. So if you're not sure where to get these are templates inside the Discord, and these will just show you all essentially the entry models for ICT, okay? And then, of course, obviously the inverse fair value gap method, which is becoming a lot more popular in the ICT sort of trading space as of recently, which again, we will cover. Now, funny enough, this is an example of this happening just 5-10 minutes ago on NQ. I was actually just sat there waiting for this to start, and this exact example you can see here happening on NQ. So if I just actually take you to the chart here really quick, I just thought it was funny, and I just thought I'd bring it up whilst I'm here. But this is obviously the 1 minute time frame, right? So if I just take you back here, right? Now this here is our accumulation, right? As you can see here, we're sort of chopping in this range, okay? Now what's underneath this range, right, is a fair value gap here, okay? Now TradingView shouldn't have printed that candle already, but it has, right? Is this fair value gap. So just to reiterate how you can use this on any time frame, and as this happened, you know, literally 5 minutes ago, you can go check this on your own chart. This is a live chart right now. But essentially we saw this accumulation here, right? And then what we did is we manipulated and took out this low here, right? And underneath this low is a fair value gap, okay? So that gives us high confidence that this is going to work. So we get this accumulation. Our bias is bullish, right? To come up here and take out these levels over here somewhere. This was literally a trade I was looking at literally 2 minutes ago. Price comes down, right? Takes out the low of the accumulation. So accumulation manipulates into a fair value gap or a PD array, or so order block, fair value gap, whatever you want to be. In this case, a fair value gap. And then it instantly distributes aggressively to the upside. So we accumulated these orders, we manipulated these orders into a fair value gap, and then we aggressively distributed to the upside. And that literally happened how long ago? That happened about 15 minutes ago on NQ. Okay, so that's just one example of how you can do it. Now, a lot of people do use it on the daily sort of PO3. So that's using the daily candle, right? Marking out the daily open. If price comes below the daily open and you're bullish, you then obviously look for buys. And if you're bearish and price comes above the daily open, then you obviously look for sells, okay? But what I'm going to do is I'm going to actually go on to backtesting here, and we'll backtest this a little bit together. Has anyone got any questions about that? Does everyone understand sort of the basic concept that we're going with here? Okay. Want to check? We'll create a new backtesting session. My bias was just bullish on this particular trade because I was looking to take out this liquidity in general, or like all of this liquidity here in general. There's just a lot of liquidity up here to be taken, but we can dive into that another time. Okay. So PO3, we'll do daily PO3 playbook. We'll do futures, NQ and ES, because I feel like that's what most of you trade, if I'm not mistaken. MNQ. Balance, we'll go with 1,000, 10,000. Okay. Now, this session isn't going to be super long, by the way, guys. I'm just going to try to keep it kind of short and sweet for you. Just get you as much value as possible, and then we'll end it at that, and we can do a Q&A. So we'll just backtest last month to keep it easy. We'll do the start of last month to the end of last month. Okay, cool. So as I said, using this sort of on the daily time frame to start. So if I look at the daily time frame here, right? Let's see what we're working with. Okay, so this is obviously, so this is the opening price here. Okay, so just to show you this daily example, here's the opening price. Mark that out. All right, that's our open. Now, I haven't really necessarily got a bias here yet. So let's jump to our session. So let's go to New York session. Let's see what happens. Okay. So price actually comes down, all right, takes out this here, and we tap into this fair value gap here. Okay. So that tells me that most likely we've taken out this wick, we've tapped into a PD array. So in this case, a fair value gap, we're probably going to continue up. Now, what makes me almost guaranteed, right, is what I notice here. Going back to the open high lows theory, what doesn't this candle have on it? This candle at the top has no wick, right? What does every single candle need? It needs an open, a high, a low, and a close. This candle has no high. So for this day so far, the high of this candle has not actually been put in yet. So before today is over, price needs to come up and put in a high for this candle. Okay. So right away, what I've got there is I've got my bullish bias just from this down here, right? Taking out this wick, tapping into that fair value gap. But I'm almost certain we're going to go up and at least put in a high for this candle on today. So let's scale into the lower time frame. Now we've got our bullish bias. That's almost guaranteed. And we're going to trade with our daily PO3. Okay, so scaling into the lower time frame. Looking at this. So we want price to come up to here. So now we need to look on the lower time frame for an entry. Possible places to enter. Just looking at it off my own head. You could sort of see this as, I guess, a range here. So this would be your accumulation, right? Let's see if we break out to the upside or downside. If we break out to the upside, we're not interested because we're only looking for longs. So what we want to see is manipulation of this low, and then we want to look for longs. Okay, let's see if we get it. Let's just sync this. Is that EST? No, it's not. I'll put it on EST right now. I feel like that'd be easier for you guys, right? New York. So this is like pre-market New York, okay? So let's see. Okay, so we take out the low, right? So now let's see what happens. So on the lower time frame now, we'd want to look for one of our entry models. So coming back here, we've got one of these, right? So your standard market structure shift into a fair value gap and then long, or into an order block, or we've got the inverse fair value gap, etc. Right? If you're not sure on ICT entry models, I recommend going and watching the video, or I can do another webinar on ICT entry models and how to use them. But in today's session, we're just covering the PO3, and that's what we're backtesting. Okay. So we're on the lower time frame. Let's see what we get. So we're looking for one of our go-to sort of entry models here. Now, I would want to really see price come at least above here. In terms of an inverse fair value gap, minimum here is what we've got. So we'd need price to close above there. So let's carry on. Okay, we do get above there. All right, interesting. Let's see here. We've got this sort of build up here. So we want to see this go. Oh, sorry, wrong tool. Let's see if we can pull back here. We might just go. Okay, so we do manipulate there. So you could enter here. You could definitely enter here. This would be a valid entry. So it's up to you guys. You know, you could either wait until the actual order block gets tapped down here. So here, this would be your order block, right? Or I've not actually entered the position yet, but if you were to enter just off the fair value gap, the stop would have to be down here below the manipulation. Stop loss always below the manipulation, right? Because that's the final invalidation point, or below the swing low of that. And then your take profit obviously be up here at the highs. Alternatively, you could enter at the actual order block, which I think in this case, I'm going to wait and see for an actual candle confirmation. So I've had that here. I'm going to wait and see. Maybe if we inverse this fair value gap, I would look to go long. Play extra safe. We don't. We still don't. Still haven't. Playing this out. See, we're accumulating again here. Look, guys. This is our accumulation. This is our manipulation into an order block, right? We never inverse this fair value gap, so we couldn't get in there. So we've built up this accumulation here. We've manipulated into this order block. So let's look to go long here. and we can target up at the daily candle open. Remember, this daily candle open has no wick. So this is, I'm so confident that we're going to go up there, right? Whether it be today or not, most likely will be today looking at this price action, but I'm very confident it's going to go up there. So, okay, we reject. Oh, I missed my entry. Hold on. You guys knew I was going to enter there. I'm not cheating here. Advanced order, 1%. So let's buy. And what happens, right? We accumulate here in the lower time frame. We manipulate into a order block, right? That's true. That's true. You saw, but I already called that before that happened. Okay, we saw, right? But don't be like that. Anyway, so we start pushing away there, and this is how I personally trade MNQ, ES, all that sort of stuff. This is MES on this example. So let's see, price then absolutely starts to distribute to the upside. Now I would never, oh no. Okay. Okay, we get saved by the absolute skin of our teeth there, but it does go up to the upside, right? Now I would never normally trade MES, and I have just realized that I am on MES. I'm going to swap to MNQ, okay? But exact same, similar sort of thing here, I believe. If we mark this out, yeah, no daily wick on here. We take out that 15-minute low, marking this all back out for you. And I'll just pull up the MES chart next to it as well. Maybe we can talk a little bit about SMT. You guys know what SMT is? Oh, has it got rid of my order? Oh, it's a bit annoying. Okay, well, you guys saw my entry. That's really annoying that it's got rid of my order. Damn. Okay, well, this would have been my entry here. So yeah, it was, yeah. So, but it's pretty much the exact same thing. So if I just go here. Yeah, I know, but I want to count the P&L towards the end. So that's quite annoying that it's done that. Oh, it is still running. It's still running. Open positions. Okay, let's see. And then we obviously fire up to TP there. Okay. So as you can see, that happened, right? Now, does everyone understand what I did there? That's the first thing I want to obviously break down. Okay. So as you can see, we now put in that daily open. We put in the daily high of that candle, and we would now just close this trade. Okay, we're happy with those profits. We've hit our take profit. All right, what do I consider an order block? And this is like random. I just pulled this out of here, right, out of a hat. We're just trading this as we go. This isn't scripted or anything. So yeah. What do you consider an order block? So an order block and supply and demand I consider very serious. Simply, I don't really know the exact definition of an order block, right? I started trading order blocks, supply and demand before they even came about, but it's the down close candle before a strong move up. So for example, you see this big impulsive move up here. So you can see this big impulse here, up, 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 right? What caused that move up, okay? That would be a demand or order block, right? An order block caused that move up, okay? So this bearish candle before this impulsive move to the upside is what created this move. So that is an order block, okay? Does that make sense? Just want to clarify that everyone understands what an order block is. Perfect. And bearish, vice versa, okay? Sort of like demand, exactly like demand, right? Exactly like supply and demand, right? Order block, supply and demand, as I say, they're not exactly the same, but they are very, very similar. And depending on who you speak to in the ICT space, will tell you the same, okay? Some people in the ICT space get very, very technical about it just because that's how the community can be. But pretty much it's the exact same thing, okay? So that's obviously today's trade done, right? We're happy with that. Let's book that and wait, and let's jump to tomorrow and see what we get, okay? So jumping back onto the daily time frame. And you can now see, obviously, we put in that wick. So let's go to tomorrow. Now, what do I get tomorrow, right? I'm just going to put ES on the 1 minute time frame, and we can look for maybe some SMT there. It's not really what I'm teaching today, but okay. So what do we notice? Okay, this is actually a really good example. What do we notice again, right, on this daily candle? What do we notice? What doesn't this daily candle have? It has no wick, right? It has no wick. So what does price have to do? It has to come and it has to put in that high of that wick, right? Because 9 times out of 10, that's going to work, okay? Doesn't happen all the time. Eventually, a candle with no wick will get a wick. So this is how we're using sort of the power of 3 to then, and this open, high, low, close knowledge that we've just learned, okay? Oh, is it? Oh, right. Yeah, good spot, good spot, good spot. Thank you. Oh, yeah, that's much better. Thank you. Good spot. I'm not really using the left chart that much, so it doesn't really matter. But so our daily open of this candle, I can't see it exactly unless I go back to midnight, but I know for a fact that we are below the daily open. So we're underneath the daily open. So now let's look for some longs. Now, so our daily high was there. Let's draw that across. Okay, so that's our target for the day of where we want to get to. We do have this fair value gap here. If we can inverse that, that could be an hourly setup. Looking at the 15-minute. Let's go on to the 1 minute. Exactly. So let me just show you some other examples. See if we've got any more power of 3 examples here I can show you in this. I'm not really seeing that many. I mean, I'm not sure. Okay, hold on. That could be a good entry. Okay, here we get this accumulation here. Yeah, there's our accumulation. This is our manipulation. Let's see what happens. Straight away. See that? All right. Accumulation, manipulation into this fair value gap area. Okay, fair value gap here. So accumulation, manipulation into the fair value gap. And then we instantly sort of distribute away. Right, and that's just on the 1 minute time frame, but ideally we'd like to look for something on the higher time frame. So here it is on the 5 minute as well. You can see the exact same thing. This is the accumulation on the 5 minute. Here's the manipulation into this order block. And now we should distribute away up to our target. So let's see. And let me check your guys' questions. So as you can see, price is just pushing up towards our daily high. I bet there was an example of power of 3 there again. Not a great one. You can see like continuous ones, like really small ones. So like, as you can see here, you have a very small consolidation here. All right. And if you were trading, say the 30-second time frame or the 15-second, you'd see that a lot clearer. And then you would see manipulation into this fair value gap. All right. So you've got the accumulation here, manipulation into there, distributes higher. Same sort of thing here, but really lower time frame. Like we're talking like 15-second time frame. Accumulation, it manipulates into this fair value gap and then distributes. Same thing over and over again. And I want to reiterate, this does work on every single time frame. Every single candle will print a open, a high, a low, and a close. So every single candle will do a small accumulation, then it will manipulate, and then it will distribute. Okay. And obviously you need to use this with the trend. So whether you're bullish or bearish, you need to go with the trend. Always follow the trend. Okay. So let's just see if we do actually run up to our target here. We've got bullish order block there, which we can respect. Yeah, London, Judas swing. Yeah. So you see, all right, how we take out these lows of this accumulation, tap into this order block, and then we start to push away. See what happens. Oh, there we missed our best entry actually, right there. There it was. Here's our accumulation. Here's our order block. Okay. We tap directly into that order block, and now we will move away and push to our target of these highs. I'm very confident that we will now. So I'm just going to put a long in here just to get our P&L up a little bit. Stop loss below there, target there. Little 2 to 1. Doesn't have to be a crazy RR all the time. There we go. So there's another example for you. Everyone still with me? Yes, exactly. Even, yeah. Okay. Now, what I want you guys to all walk away with today, guys that you're not really with me. Do the person that isn't really with me, do you know much about ICT, just the concepts in general, or is this completely new concept to you? So 50%. So you know a little bit about ICT. Okay. Would you guys be interested in sort of a beginner ICT webinar where we go from straight beginner to all the way up to stuff like this? I'm just out of curiosity for what we've got in here at the moment. What sort of experience do people have with ICT in general? Just so I can sort of, tailor the education. Yeah. So ICT necessarily isn't based off. It's not necessarily his own. It's based off. There's a lot of different things, right? He claims it's his own, but I think it's personally based off a lot of different things, such as Wyckoff, right? Stan Weinstein's thing, yeah, all this sorts of different stuff. I'll try to take you through a few more examples. Okay, what I can't do today is explain to you very much so the entire basics of ICT, because that will be here all night. Okay, if I were to fully explain to you ICT, obviously this one just from Norman Strategies and Momentum Training. Okay. The whole concept of ICT, right? Just getting into it a little bit, okay? And I'm not going to try straight too long, right? Because they might as well do a mini course, right? This is what I mean. You guys, you're straight. The whole concept of ICT, right, is essentially this power of three concept room, okay? So ICT is all about, right, orders and liquidity, okay? So even if you were in order flow or something else, you would see liquidity, you would see orders built up, right? And then what we always want to see is a raid on orders or a stop run. And this, essentially, this group of orders getting taken out is then what generates the liquidity for us to go up, okay? So it's all about kind of going the opposite way to, so like, they say retail, right, in ICT as a word. So this accumulation here, right? Always we want to manipulate and take out liquidity to then move up, right? We can't move up without orders or sort of backing us up to power us, right? So say for example, we were to see that's so in this example, right? There's loads of different examples of liquidity, but this here would be trendline liquidity. Okay. There's stop losses underneath here. The stop losses underneath here. Right. So then price comes, takes out all of these people, manipulates people. Right. And then it also tricks people into thinking it's going short. But then what it actually does is it taps into an order block or fair value gap and then massively expands to the upside. Okay. That's a very basic understanding of ICT there as much as I can. I can do a full presentation, go more in depth for it for you guys. But again, I haven't prepped that today, so I can't necessarily do it today. But I can do a mini sort of course for you guys to get you started if you like. So let's go on to the next day and I will show you another example. Well, we'll look for another example. We might not get one. Are you going to post this session for those who missed out? Yes, hopefully it is currently recording and hopefully it recorded all of it. So yeah. Okay, so let's look at our daily candle again, right? So this time we do have a wick on this, right? So now we have to sort of manually decide our daily bias. Now it's not obvious on the daily. Now right away here, I personally am bullish, right? The reason for that is because this here is a fair value gap. And so if I just mark this fair value gap, this is a big 4-hour fair value gap. Okay. And then this is also a 4-hour order block. So personally, I have a bullish bias on this day. Again, I can do a separate session on daily bias, but we can't necessarily go into that today. You need to understand the basic ICT concepts to understand daily bias, things like fair value gap, order block, market structure, right? Those of you that don't understand, market structure is what builds up a lot of your bias. So in the market, you have highs, lows, highs, lows. Now, the difference between how ICT and sort of these concepts see the market versus how normal people see it. So this is what an average person sees the market as, right? They just see it as normal highs and lows getting created like this. ICT sort of people and people that look at the market this way see it more like this. Okay. If I just carry this on. All right. So instead, so that's what a normal person sees it as. This is what it's actually like. And ICT takes sort of principles off this, right? So this is a low, gets taken, these gets raided, right? These stops get taken out, then we push to the upside. This is another low, gets raided, then we push to the upside, right? This is a low, gets raided, then we distribute to the upside, okay? So what a normal person would see, what it actually works like, and how you sort of take the most out of it with ICT, okay? Oh. Anyway, carrying on. You guys keep sidetracking me. As I say, I will do some more educational material, and I'll put some videos up on YouTube and stuff for the basics for you guys. Can I explain FEG a little? Yeah, so a fair value gap is essentially an imbalance in price, right? So here, right, there was so much buying pressure here. When this candle went up aggressively, there was so much buying pressure here that it actually left an imbalance in price. Now, you see how these wicks, right? So here you can see this, there's no gaps here. There's no gaps in this price. This is what we call efficient price, right? Because there's a gap here. So if you look between these three candles, this candle, and this candle, there's a gap in between them. That is a fair value gap. That is an imbalance in price because of buying pressure. So there were so many buyers between this candle that price left an imbalance, right? Or a void, so we say, that needs to be filled. And more often than not, price is going to come back to fill this because there's an imbalance in price and price has to be efficient. Does that make sense? I hope that makes sense. If you don't know, I'm sure there's a million videos on YouTube about what a fair value gap is. Okay. So if you're unsure, you can go and watch those. But price is in our eyes, price is either seeking one of two things. It's either seeking liquidity, so orders, stop losses, okay, or it's seeking imbalances, right? A lot of sense, but when the wick isn't touching each other. Yeah, so if there's a gap and wicks aren't touching, that's inefficient, that's a fair value gap. So this is a fair value gap. This is a fair value gap, okay? Yeah. First and third candle. It's the gap in between the first and third candle. Yeah, awesome. All right, so let's see what we've got here on this power of 3 example. Now, I've completely forgot where I was in this price action. So we were looking at that. That's our target for the day. Okay, so we've got this 1 hour order block here. I mean, we could probably look to go up from here. Let's look for our power of 3, so our accumulation manipulation. So we've got this here. Got this liquidity here. I would look. So we did accumulate there and we did manipulate there. Let's see if it goes up from here. We do start to move up. Yeah, okay, just starts to fly up there. Does it run all the way to the TP? Yeah, it does. Okay, so simply there on the lower time frame, we had our bullish bias. We had our accumulation on the 5 minute here. We manipulated that, and then we instantly pushed them back up to the upside. Kind of how I just spoke about in that market structure sort of demonstration, right? We have our initial area price. Everyone normally thinks goes like this, but instead it kind of goes like this because that's the low, yeah, before we continue up, right? And normally people would draw it like that and then they would continue. But what actually happens is it comes down, takes out the low, and then continues up. Does that make sense? Okay. So yeah, there was our power of 3 example, and there was our TP based on our daily bias. This was our fair value gap. We rejected from our fair value gap, and then we absolutely skyrocketed to the upside. Okay. So yeah, moving on to the next day. Let's have a look. Let's see. We want to look for buys or sells. Where's the daily candle? Daily candle took out that candle. Where will this be posted so we can watch it again later? I will post it to YouTube. We are in 44 minutes. I feel like me going through this and just continuing to backtest might not necessarily be the most beneficial thing for you guys. But we'll do one more. We'll do till Friday at least. Okay, so here's our order block. I would like to see these highs go on this day. We could pull back here, but I think we go for this liquidity up here instead. Let's see what we've got here. So we are in this order block. We've got a fair value gap before the order block, which makes it valid. There always has to be imbalance before a fair value gap, or imbalance before an order block to make it high probability. No imbalance before an order block, it's low probability, okay? So let's go on to the 1 minute and see if we can get an entry here. I'm not the biggest fan. I mean, you could technically have an entry here, down here. I'd probably wait. Yeah, good thing I did. See if it gives us a good entry. Still nothing clear yet. We almost inversed this fair value gap, but we didn't quite. Okay. Okay, we should get an entry here, I think. So, price did this accumulation here. Okay. At the bottom. Then this candle manipulated, pushed up to the upside. Right, we got a change of character. Here's our change of character. And now we've left displacement. Now, displacement is a strong push that leaves imbalance behind. So I would be happy entering here, and I would get long there. I would put my stop loss below there. And let's go ahead and target. I mean, really, in real time, we'd be taking partials all day, every day. Like, Jesus Christ, that would be a humongous trade if this were to come through. Realistically, our TP would be there, but let's extend it up to there. So we'll take partials here at a minimum. Or we'll get stopped out. 1 minute execute, like refining this on the 1 minute and using accumulation manipulation on the 1 minute takes time, and you need to practice this, right? You need to start in a higher time frame to work your way down, and then you can use things like backtesting to get better and better at it. But let's set this limit. Let's see. We get tagged. and we do start to move away. When we take this high, I would go break even. And let's go break even. And let's see how we run out. I mean, realistically, this is a live account right now. I'm really considering taking most of this off. Let's see if we can run up to those highs. We've got equal highs here, right? So this is quite a lot of orders there. So it's a pretty good target to have. Right? And you'll see it then again there, power of 3, as we say. Okay. Accumulation here. Accumulation. Here's our order block. There's our order block. Do you see that? Accumulation, manipulation into an order block, and then we distribute to the upside. Let's see if we do. Then we get that strong move to the upside. We take out our first target. All right, so let's drag this across. Let's close half of this position. All right, and we're already up 1 to 8. Full targets is 1 to 18. Let's see. Are we going to get taken break even? Looks like we might. Play it out. Okay, so we get taken out break even. No issues there, right? Again, we got our target. We didn't get the full target, unfortunately. No worries. Okay, that's still a good trade. All right, we still got a 1 to 8 on that, which is very impressive, if I say so. So yeah, let's see. What time are we at here? So ideally, we're probably looking. I mean, this day's over, right? So let's go to tomorrow. So we're on Thursday right now. Last day of the week, Friday. Okay, so interestingly enough, if we actually just left our stop loss on, we'd just about be in it. Probably not. Let's be realistic. Okay, so let's see what we've got. We've got some accumulation happening here. Let's see which way we manipulate. Okay, we manipulate down and up. I'm guessing there's a news driver there. So news just came out. Now, tip for news, right, is you almost always, I talk about this on our community sessions, right? When we do the NFP, FOMC hangouts, for those of you that have attended before, right, I almost always give you guys this trade. Whenever news comes out, you always want to target data highs, data lows, right? It's the easiest trade in the world. Always, almost 90% of the time it works out. So this closes, okay? So it doesn't actually close below these lows. We've got data highs, data lows. Which ones are we going to run for? Okay, so we're going for data highs. Let's see if we can get an entry model. No, we probably wouldn't get an entry on that, but it will go for that high. I can almost guarantee it. You could enter off a fair value gap here, actually. A bit risky. Probably not something I'd do. And a really low R. But this is backtesting. And there you go, you get filled on that one. Full target would be these highs at the top, which we do eventually get. So I just skip that. And then once we take out that high at the top, I would probably look for sells, to be honest. So I would look for something like this, because we seem pretty overbought. So down into there, something like that. So I would wait for price to get through, and let's see if we can get, I mean, we just take it. Let's see if we get an entry model to go sells. Okay, so we do potentially have a setup here. This is a riskier one. Got a change here, and we've taken out that high. This fair value gap here, though, a little bit shaky. Ideal scenario, you'd want to see this fair value gap inversed. Do 0.5 risk. We'll just do a market sell. Market. Why is it not letting me? Oh, I'll just do. We'll do like 5. And we'll just drag the stop loss above the highs. I mean, minimum this wick, right? Ideally, we can look to target these data lows. As I said, data highs, data lows of news events. Let's see. And then it gets absolutely shredded. I'm very curious to know. Oh, okay. So that was the 10 a.m. I'm very curious to know what actually set that off. But yeah, what time are we on? 53. So yeah, we've done one trading week there and we're up 17% essentially. So yeah, that is the power of ICT PO3 and the open, high, low, close. All right. This is obviously the PowerPoint. Just explain it again, guys. Really quick before I go. I'll show you. I can show you guys examples on a live chart. Oh, another good tip as well that I was going to tell you guys, right, is on TradingView for this, there's an indicator, okay, and it's called what's it called? PO3, right? So if you just search PO3, right, and you'll see it there, higher time frame power of 3, okay. And essentially, what you can see is the daily candle on the chart next to your trades, essentially, right? And this is essentially, you'll see the daily candle open, you'll see it put in the low, as I said, open, high, low, close. So let's say the open's here, right? Low, high, the high, and close, okay? Right? So this is a really good indicator to have on your chart. And yeah, I'll check your guys' questions and yeah. Let's see. Once you master PO3 and market making models, then you're literally printing dollar, guys. Not financial advice. This is an amazing freebie over. Yeah, yeah, pretty much. I do personally trade these concepts, and I can tell you from experience that power of free and market making model from ICT has personally changed my life. So yeah. We're going strong. Yeah, time to switch strat, joke lol, but this is great knowledge. Appreciate it. I think with every strategy, right? Every successful strategy is built on one similar thing, and that is liquidity. Okay. Where are orders? Okay. Those orders need to be taken out or manipulated before a move can happen. Okay. So if I just come onto the chart and I'll show you some more examples really quick. Again, I know I'm kind of ranting here, but look at this, for example, right? Look at this accumulation that we had here. Okay. This is all accumulation, right? Price aggressively manipulates and then sells off extremely hard. That's the same thing that we've just been covering again and again. Okay. Let me find you another example. Here's obviously the example we showed before. This is accumulation. This is this accumulation range here. Manipulates, sells off aggressively all the way. Okay. Look how it reacts to this fair value gap as well when it's bearish. This is the fair value gap. Conveniently, it taps perfectly into the fair value gap and then continues to sell off. Okay. What is a data high? A data high is the wick and the open and the high on the 1 minute chart. So all right, we're on the 1 minute chart. A data high and data low. So this would have been at 8:30 EST time. And that's obviously when the news comes out. So NFP, CPI, PPI, right? Open, high, low, close. Yeah. Data high of the 1 minute candle, data low of the 1 minute candle. 9 times out of 10, both of those will get taken in a short period soon. Can I elaborate on why shorts? Why shorts? We took out this high here, and then it was a riskier trade, granted. We accumulated here. Again, you'll get better at spotting this, but this kind of like this is kind of an accumulation, right? We manipulated this high. This is kind of a more advanced example, but we manipulated that high before making then a change here. So this is a shift in market structure with strong displacement, right? The word displacement is key for every trade that you take. So aggressive close, as price starts aggressively selling off after this liquidity sweep on the 1 hour and the 1 minute. So then you just, because it's aggressive and it slaps a higher time frame area, you just enter with market execution. And as you can see, it aggressively sells off. You can even make PO3 macros and windows. One of you, yes, you can. Yep, there is an indicator for that. Can you share your YouTube channel and the PowerPoint? I will share my YouTube channel. I don't have many videos on there at the moment, I'll be honest. But I will upload this video to it and I will link it to you guys on the YouTube channel. Okay. What was that last trade? I just explained it. Thank you for going through all this. No worries. Appreciate it. Thank you. What ICT concept so first things first, to first look into with ICT, the most powerful concept is the power of 3, which I've covered today. That is the most powerful concept. Full stop. Right? It's absolutely amazing. It's what runs every single candle, whether you see a 1 minute, 5 minute, 15 minute, 30 minute, 1 hour. Every single candle has the power of 3, right? Pretty much anyway. Okay. So power of 3, you need to learn fair value gaps, order blocks, and just general market structure. Okay. Those are the concepts you need to learn. Even news trades make far more sense when you learn power of 3, open, hold, high, close. Yes, I agree. ICT cores, concepts, YouTube. Yeah. Can you quickly run through today's session? I will send you the recording of today's session. Can we get the slides in the Discord? Yes, we can. I will put the PowerPoint in the webinar chat for you guys right now. ICP PO3. Okay, awesome. Right. Did you guys enjoy today's session? All right. If you enjoyed it, I'll do more. If you didn't, then you know I won't. Amazing, amazing. And what other sessions would you guys like to see from me? What else would be useful to help your trading, whether it be journaling, footprint charts, order flow charts, ICT trading, certain